Good morning, everybody. How you doing? I'm Ed Parcaut, usually here with Mike Kelly on Real Estate Jerky Daily, but he is out reading to children, giving back to the community. He is the president of Rotary, so it's something he should do. We had our Operation Firewalk last weekend. It was a great success. I want to thank everybody who was part of it, and we are now looking to see how we can make it better for 2026. All right, that's all I'm going to say about today. Let's look at where we're at. Okay. And today, since Mike's not going to be here, of course, it's always just the facts. We're going to get right into the numbers. All right. So let's see what we have today. So right now, the Dow's only up 17. The 30-year is sitting about 4 basis points down. The 10 years up a little bit. We're at 4.33, kind of going the wrong direction right now, but eventually it will get better. I know it will because it has to. What else is going to do? All right. So ISM Services Index came out today, which tracks the health of U.S. service sector, rose to 51.6 in April, beating the expectations of 50.6 and up from March 50.8. This suggests a modest expansion in the service industry, which is a positive sign for the overall economy. But it's kind of opposite of what we want in the bond market, right? We want this economy to have a problem, or we pay off our debt and then we'll be just fine. But positive news, the um, crude oil has dropped to $57 a barrel. That's huge. This move has been driven part by OPEC's announcement to increase productivity by 411,000 barrels a day in June, nearly 1% of global output. I think they're trying to keep us from pumping our own oil and putting it on the market because we are competition for them. This is great news for inflation, of course, as we all know. Housing inventory, big thing on Monday. We always look at the nationwide housing inventory. It went up 15,470 units from 728,755 to 744,225. Context, last year, same week, only went up 3,670 units. This now is the peak of inventory since 2022. Which is at that time in 2022, the all-time low of 240,497. What it's showing is now we're finally above what we've had over the last since 2022. We are the highest. Last year we were the highest last year. Now we're the highest this year. Question is, how much higher is this going to go? For context, when we have more inventory, that makes it better for affordability, price moderation, and buyer's choice. However, just to put in perspective, in 2015, active listings were about 1,081,867. So we have a ways to go, about 300,000 to get there. A little less than 300,000, but that's just a quick number. News this week, we have. I thought we had something tomorrow, but it's not here. But Wednesday we have a Fed meeting. Let me go down to where it's at. Here we go. Tuesday, 10-year auction note. That's why it's not important. Wednesday, mortgage applications, Federal Reserve decision. Thursday's initial jobless claims and 30-year auction. Wednesday is really the big thing about the Fed component, about what they're going to say and what Powell's comments are going to be, could really move the market one way or another. I would just, if you got to close soon, I would just lock the thing and move on and not worry about it. But if you got to hit a certain thing, then you got to keep going. The biggest pressure right now is student loan stress and economic risk. Current landscape, we have 10 million borrowers who are behind on payments on their student loan. 5.3 million are in default. That's over 270 days late. That's almost a year, people. 4 million are in the late stage delinquency, 91 to 180 days late. Beginning this summer, wage garnishment notices will go out and potentially allowing up to 15% of pay to be withheld for those in default. This is going to roughly impact about 65% of these borrowers are low income, making them especially vulnerable. They can set up a payment plan that's affordable to them. I've seen them as $0. I've seen them as $5. If these garnishments kick in, consumer spending can drop significantly, and they're saying recessionary pressures. Just call your student loan people and have them set up a small payment plan, because you can do that because they goes off income, so they can adjust that down. And that's pretty much all we have right now. I want to get into seeing the inventory. Where is it really located? Because I want to know how many single family homes and condos are for sale in Florida, Texas, and in California. And we'll wait for Mike to get back for that. So that'll probably be Wednesday. Hopefully he gets the information that I'm throwing out there right now. But as much as we throw numbers out, because I was talking to somebody at the event and they're like, you were saying all these stuff and I didn't follow. And that's okay. The biggest thing that you need to worry about is talk to your agent and talk to me, if you're working with me, but talk and find out where the market is and what's going on. Right now is a perfect time to buy. We're starting to get a little bit more inventory, a little bit more choices. It's slowly we'll get into, to a balanced market. That's where I'd want it. That means it's the seller's not in charge and the buyer's not in charge. You guys can negotiate. It's still a great time to buy. I know people keep hearing us say this because eventually rates will drop more, and you're going to be in so much competition. You're going to wish you would have done it now. Again, you can lead a horse to water, but you can't make it drink. All right, everybody, make it a great day. Mike will be back tomorrow, and I appreciate you watching, and I appreciate you. Have a great day. Bye.